Jamie, my good friend in Texas, how are you?
What's going on there, Andy? Just
Uh,
acclimating to the humidity and heat that
yeah.
that exists here. But other than that, par for the course.
Oh yeah, it'll go away in due time, but then return with vengeance again, in the early summer. But that's
Absolutely.
yeah. It took me a while to get to reacclimated over after being gone for 20 something years. But all right, guys, we won't ramble on too much. Thank you so much for your attendance today. We got a lot of people filing in here, so that's always good to see. Looks like people are, kicking off their sandals and ready to get back to work as we head into the fall. But so let's dive in. Before we do, let's go over the disclaimer here. Oh, I jumped too far. Geez. Why is it not letting me go back? Ah, did I lose you, Jamie? I'm still there, right?
Yeah, you're it's showing the summit slide right now.
Yeah, there we go. I don't know why. Usually I can hit the backspace and it would take me back to another one. Wouldn't not let me do it. All right, guys. Here is our disclaimer for today. Me and Jamie are going to be talking a lot today about stocks and setups and things like that and some cool stuff, but nothing that you hear or nothing that you see should be construed as investment advice. All right. If that's what you're looking for, please look for a registered broker, stockbroker, or RIA, somebody that can act in that capacity to give you advice. All right, we must not forget to entertain you today about this big event we have coming on October 20th, and you want to get in soon. Okay, I hear the tickets are going up this weekend, so guys, you probably will get an email. We have a great lineup. All right, Brett Steenberger is going to be there. Steenbarger, I should say. I got Brian Shannon, who was there last year, and we got a great response from, and people really enjoyed that. And also JC Peretz is joining us this year. So, and there's a few, we had so many good ones that we had to display here that we had to leave a few others off. So it's going to be a great lineup. So make sure you get your tickets and go to TradeIdeasEvents.com and you can find out more information on those tickets. All right, I need to talk a little bit about our support, education, and training here at Trade Ideas because I know a lot of people in here for the first time. They've heard about this great program, but you also may have heard it's very powerful and it may take a little time to learn, but that's what we are here for you. People like myself, Jamie, Steve, Sean, a lot of us here, Barry. We're loaded up with support, guys, and it's not just people who have basically used Trade Ideas since inception. It's people that have traded over the last 20 years. So you can't. It's hard to find in any company where you have people, that knows the product like the back of their hand, and also well experienced in trading the markets. We have 4 webinars a day in this time, or 4 webinars a week in this time slot, 5 Eastern time. It's usually a combination of myself, Jamie, or Steve. We kind of shuffle around. On Wednesday, we do throw Dan and Brad Williams at you. Dan Merkin's our CEO, Brad's our CTO, and that's a great place to come if you want to learn more about what's coming down the pike as far as bells and whistles. And then we have our traders room, and I'm sure most of you know about that. It's a free room open to everyone, not just free for subscribers. It's free for everybody. Great hangout, 500 plus traders in there. You guys can get in there and look at our software, and not only that, get some great calls. So be sure you do sign up for that if you haven't done that yet. Registered and get in that traders room. Friday support session. Okay, if all of our help is not enough during the week, we have a 3-hour support session on Friday starting at 11 Eastern time. No agenda, no presentation. We are just there to answer your questions, and great place to come. And you think that would be enough, but it's not. We provide TI University. This is also free to subscribers. When you get the product, you get an invitation to TI University. You do need to register for this. And what this is, it's starting on Monday and running through Thursday in the 12 Eastern time slot. You can come in and take class 101 on Monday, and you graduate up to 401 on Thursday. 6 hours worth of content, guys. If for some reason, maybe you're working, you can't make it, that's okay. We have these recorded on our YouTube channel. Just go to our playlist and you will find them. So no excuses there. We will get you up and going and get you up and going quick on our software. All right. Let's talk a little bit about Brokerage Plus, all right, because I'm hearing this is going to be coming out of beta shortly, all right. So if you have Trade Ideas Premium version, you will be grandfathered, okay. But once it comes out of beta, if you do not have it, you are no longer grandfathered, and it's going to be a fee. Don't know exactly how much it's going to be yet, but just if you want to make sure, guys, if you haven't signed up, sign up to Premium, or if you're using Standard and you want to use the Brokerage Plus, make sure you get Premium. All right, this is a way for you to take your strategies and automate them with interactive brokers. If you want more information, go to trade-ideas.com/beta. Let me get me a drink of water here, guys. All right, let's take a look at our agenda for today. I'm going to go over the market recap, as we always do. We're going to talk about the gap fill. I wrote this actually last Friday, so I just left it up here. I mentioned the gap fill and spiders. Now what? So this is from last week. We're going to take a look at what happened, and it did happen. The gap was filled, and what happened after that may help you with your trading strategies and things like that. Holly recap. We're going to go over that. It's kind of a sloppy day in the market, but Holly did pretty good. We'll go over those numbers. Jamie will break that down for you. Look at some of the individual trades, and he's always proficient at explaining Holly to anybody who has questions out there. I am going to talk a little bit more about SCORE today. SCORE is our new composite rating that we introduced last week, or gosh, maybe was it? I've been teasing for a month, so now I'm trying to remember when it finally launched. I guess it was last week. Was it last week or 2 weeks ago? Okay, last week.
It seems like 2 weeks ago.
It does. It does. So thanks, Jamie. So yeah, I'm going to go more in depth about that. Kind of give you an idea of what it's looking for and how reactive it can really be. All right, and then I got an email that gave me a great topic this morning. I was kind of looking at what am I going to talk about today, and the guy sent me an email looking for a certain setup. And I'm going to tell you how I took what he was looking for, even though we didn't have the exact filters he wanted. I'm going to show you how I improvised and built it, and I think it's going to help you when you're trying to get a grasp of what you're looking for, how you can use some other filters to kind of improvise. And then if we have time, guys, we'll do some chart requests. All right, let me back out of this and let's pull up the spiders. And get me another swig of water here. Okay, so last Friday would have been this day right here. This red bar where we kind of did a little hammer, and that's when I came. I said, well, we got the gap fill. There was the gap. I could take this bar and lift it up right there. There was your gap, went a little bit below, kind of came down here into this area the next day, but that's what we got, and then we kind of got a little sloppy in here for 3 or 4 days. It's kind of in a tight range, and of course we got the gap today and a little bit movement higher. Not a whole lot of movement today. It was a narrow range in the spiders, but nonetheless we did. It's headed in the right direction once again. Here we are next to all-time highs here. But I wanted to talk about this because I know Steve was talking about the possible gap fill. I was talking about it, and we got it. And this is where, when you're looking at charts and other symbols, not just the spiders, and when you see those setups like that where they come in, I know sometimes it's hard to catch, stocks that are falling in, but a lot of times that can be a nice little setup. It could be a nice little place to take some risk. In other words, instead of buying it up here on the breakout of all-time highs, it's pulled back, you buy the gap fill, and you may experience a little bit of pain from that gap fill, but still now you're moving higher. And it's pretty much textbook, this right here, and you see a lot in a lot of different symbols. I'm looking on here to see if we can see it. I'm not going to do that. I'm going to go over some other. Let's talk about the Qs real quick. pull up the cues. We like to focus on the daily. Now this one, it did come back, way below its breakout. So, this one you would experience a little bit of pain, before it finally bounced back. A little sloppy in here, but now it's moving a little bit higher. I think the real reason you're got a little more deterioration in this, the cues kind of, remember, got a head start over the spiders earlier in the year. And I think a lot of stocks like Facebook, Netflix, Twitter, some of these social media stocks have been really kind of hurting the overall NASDAQ or tech-heavy stocks, we should say. But nonetheless, back above all its moving averages. We keep saying over and over, nothing really bearish, to make. I think the 50 is definitely a cue. A level to watch if we do come back down later. You can see that's been a very defined support level. It keeps bouncing off the 50 and couldn't even get down in touch at this time. But other than that, let's IWM. It's not as strong. Still kind of battling in here, but nothing. Once again, nothing real bearish. Just kind of nothing really going on there. And then the diamonds, which has been lagging in the overall market, still kind of a ways from their highs. If there's a kind of a rotation play potentially, maybe you could take a chance, because it did get above this level right here. So there's not a whole lot preventing it maybe from going up to that level. So, but yeah, there's no bearish case. No bearish case, but unless Jamie sees one in there somewhere, but we just kind of meandering higher now.
Negative on the bearish case there.
Yeah. Yeah. I keep I keep feeling little. I think it's so much. It's more the lack of enthusiasm, in the market as we keep, going higher. But that doesn't mean we can't just keep grinding and grinding and grinding. But
exactly, because they took all the steam out with a gap today. I mean, kind of throws a monkey wrench into the wheels as far as traders go.
Yeah, you're exactly right, and that can be real frustrating. And I remember when I was day trading, avidly back, 3 or 4 years ago, and even going back, 8 or 9 years ago, it was so frustrating because over this period you do get a lot of gaps, because after the big bear market in 2009, where everything just got, destroyed, it just seems like there was a lot of fear. So people would like pull their market, sell all their stocks going into the weekend, and then of course you would have to chase them back if you had a quiet weekend, and then you were chasing back, on Monday, and you still get quite a bit of that. There's a gap right here. There's your movement. All your move is basically in one day. But I think that's going to wrap it up as far as our recap. Let's go into Holly today. I'm trying to think. I didn't have a whole lot to add today. On Holly, I usually have kind of some things I want to say going into it, but
yeah, it was just. I mean, hey, we've gotten so used to seeing the trio of AIs just have 10, 12, 15-point days, that when we see performance like today where it was up a meager, just a little over 2.5 minus 80, up not even quite 2 points on, a fair amount of trades. It was just kind of a lackadaisical performance. But there's still some interesting things to point out about interacting with Holly, right?
Sure, absolutely.
Whereas Neo, the bigger winners were on the long side. 2.0, man, that thing was heavy on the short side today.
It was.
And, there's a couple trades to point out on 2.0 where, same old song and dance where you barely get stopped out, but then sure enough, later on it shores up and works really well. So whenever you're ready, I'd be happy to wax a little bit about those.
Absolutely. Yeah, go ahead and grab it, and by all means.
Here we go. Okay, let me know when you can see.
All right, I got it.
Okay, perfect. All right, so let's just do this. I'm currently on Neo. We'll save the longs for the latter part. Let's just go ahead and pop into 2.0, because just take note of the blotter here on, I've got sorted by risk on here. Just take note of what you see here, long, long, long. Now, when we pop it back over here to 2.0, a little bit different of a story, right? Short, short, short. Now, right off the bat here, this here, right? Holly gets stopped out. And of course, look what happens after the stop out. So let's just take a look at that here. All right, so number one, not looking too bad on the daily there, but certainly that stock's had a huge run up from, what is it, $2, all the way up to 34. And so Holly 2.0 decided to take a short play right here, and we can see as soon as that trade was put on, we got a little bit of yay, everybody's happy, and then boom, by the time it was all said and done, barely. I mean, look at that stop out. I mean, it tickled it to the number right there. And then of course, what happens? We get this little sideways action here. So, you know, this one's kind of hard because, you know, this area right here kind of spoiled a nice clean range break here, because even as we got back down to over here, there's nothing real clear about this. And this is just, you know, what happens from time to time. I mean, I can't tell you how many times I've been in this trade, so to speak, from a manual human perspective. And on a day like today where, you know, we had a nice little gap up, you know, there just wasn't a whole lot to give today in this range. You know, I mean, not the easiest range to trade from anybody's perspective. When we run up, come all the way down, put in new lows, not quite half of that gap trying to get filled there, and then just kind of chopping around the rest of the day. I was a little bit surprised at the action because one of my, you know, favorite windows to watch right in the beginning of the first 15 minutes, my compare count windows, it showed a huge buy side, you know, bias. But then again, every time we have a gap like this, we have to kind of throw a little bit of more caution out there and go, well, you know, when the gap comes, not only does it make it more difficult for us humans, but it makes it a little bit more difficult for the statistical model known as Holly. So usually on these stop outs where the risk on ends up doing really well, we can pick some good areas here. But on this one, you know, unless we marked up this little area right here that it put in earlier, there just wasn't a whole lot of signaling here or just a whole lot of confidence to get back into this trade. A lot of times there are, but on this one, simply not the case. Now this next guy right here, Eros, timed exit, right? Coming from downward dog showing, oh yeah, 60 minutes, which is what a lot of these guys are, 60, 45 minutes. So just a good old clean timeout here on the Eros. And, you know, had we stayed in it right here, let's see, Holly getting out about right here. This is the entry. We get nice movement. Of course, keeping in with the, I guess the theme of the day, not a lot of pain-free in these. So we're in the money. If you can stomach it all the way back up, right, which, you know, depending on the day and how your day's going, maybe you can, but it's not a whole lot of fun to see something get in the money and then have to sit that pullback all the way back to the top here. But the long story, or the short story, is this: Holly plugs out for 8 cents. If we did feel like there was some more juice left in this, we could have stayed in it, all right? If we did set our stop loss back to break even after Holly got out, which is right about here, would have just barely stayed in that trade and gotten that release. And, you know, did have the potential to capture somewhere between 8 and 58 cents. So not a huge risk on spread on this guy right here, about 50 cents, right? But then again, the name of the game is capturing just a little bit of this. You get 25, 30 cents. It can make a difference. So, you know, not a lot of success with the shorts today, and being able to stay in those guys pain-free. A lot of vacillation today. So let's just go ahead and pop it back over to Neo, which was more on the long side on the winning trades. Of course, look, bond shorty, HIIQ. Let's just take a look at this other short here, because this one is a little bit more predictable, right? Holly closes it out because, hey, this looks familiar, right? Got the entry right here. What does it do? It just meanders for a long time right at that entry signal, all right? But the good news is we don't have it all stretched out like the other two shorts that we were looking at from Holly 2.0 today. So this one would have been a little bit easier to stomach, keeping in mind that the stop loss is way up here. You know, we did meander sideways through the entry line, but got nowhere even close to stopping us out here. So when we see Holly pulling the plug early right here, down 15 cents, you know, wouldn't have been too far of a stretch to go, hey, tell you what, I am going to go risk on this one. I'm going to set my stop right outside of this little consolidation period that's building right here. And by the way, these are 5-minute candles. And we would have been able to stay in that one and just slow grind down for the rest of the day, getting most of the move at the very end of the day here. Now let's take a look at a couple of longs here, because this is also a classic risk on move where, once again, looks very similar to the short that we just saw, but basically going the other way. Man H, nice little entry signal here. What do we get? We get more of the same, just kind of ebbing and flowing right at that entry line, and Holly deciding to get out here. Now in this one, a little bit better on risk off, but still compared to what was left on the table, 13 cents, a lot of room for improvement there to the tune of about 45-cent spread between 13 and 58 cents. So we see Holly getting out right here. Once again, this would not have been a real difficult decision to maybe do a little bit of both or do the whole lot risk on. The more you interact with Holly, the more you get used to it, the more comfortable you're going to be doing the whole lot. But for the new people out there, and even for the people that have been watching Holly for a long time and hearing this advice from me for a very long time, sometimes it takes a while to sink in. Good way to get over that learning curve is just do a little bit of both. You're long 200, peel out 100 with Holly. Never even came close to that break-even stop here, and we could have enjoyed the biggest part of the move for the remainder of the day as it broke here and continued on to highs. Didn't really set up again for like a second entry. These little guys right here, this run kind of spoiled the party, stretched the chart out. You know, we're looking right here. You think to yourself, well, maybe this would have been a good entry, second entry, add to the position. But, you know, it really just depends on your risk tolerance. Preferably, I like to see not only this type of pattern, but also a break to high of the days. And since we had this little run up today, kind of threw that out of whack. Didn't really pop highs until the last 5-10 minutes of the market. But all in all, not too difficult of a decision to go risk on this one, set that second lot or the whole lot back to break even, and you would have been able to stay in the Man H trade today and get a large portion of that risk on spread there. Let's see, cone. Okay, another classic example here. Entry signal for Holly right here. Shortly after the entry signal, here we get that little sideways action today. And then this little guy did go ahead and break new highs. So if we're in it right here and we see these little whiskers being put in at the top, push through right here, you break to the high of the day. This one would have been an excellent position to add a little bit to, since we got what I like to call in my little sphere here, an early entry from Holly, an early statistical entry, and then we get the consolidation and the range break. This is always a good time to add to that position once you get this nice little consolidation here. Also, not the biggest, the baddest volume I've seen, but then again, today there weren't a whole lot of stocks, you know, rocking these crazy relative volume numbers today. So this one was well above 1 for most of the day. So when you see these things, these opportunities present themselves, it's always a good idea just to take a look down there at your single stock window, confirm the volume is there. This thing was ebbing and flowing as well today, and the 5-minute and 1-minute volume were staying pretty healthy. So when we're thinking about adding to a position, if the chart dictates it and we've got that volume push too, that can give us a little bit more confidence to pull the trigger, add to that position, and really leverage the second part of that move there. So on Cone H, once again, not huge spreads today. What do we have here? 34 cents between there. So even if we were able to capture extra 17, 18, 20 cents, over time that really does start to add up. So, all in all, looking at the little Christmas tree of winners and losers here sorted by risk on, it almost looks flat, not quite, up slightly, $1.33 on 16 trades. Not the best performance, but not the worst either. And that's pretty much all I got to say about Holly today, Andy. I mean, it is what it is, Statistical models are not immune to gap ups and choppy days. So, just kind of par for the course today. Not a whole lot going on, but still some really good entries from the AIs.
Yeah, so there were definitely some great ideas in there, and that's what we're all about. And once again, you always got to look at the backdrop of the market, and gap ups can be tough. I don't care what strategies you're using to trade it, and kind of a gap up and a sloppy sideways actions. But nonetheless, some decent trades in there. But
yeah,
yep, well done, Jamie. All right, yeah, if you want to shoot it back over here
to you, and you can show them what you got.
All right, sounds good. Well, guys, and first of all, get some great feedback from SCORE, and I'm glad to hear it. I kind of want to go a little more in depth into SCORE because our SCORE is a little more sensitive, to the market than what you're going to find out there. I'm not going to name names of other sites that may have, composite rating, whatever have you, but I just wanted to be kind of explain what is the makeup of ours. All right, we talk about it. It does have about 15 plus different metrics. Most of them are technical. We do have some fundamental stuff in there. Just for those of you guys in here for the first time, let me just right click in on here and go to. Oh, and by the way, I did tell the developers. I sent them a note that you got to get this into our help document so people will understand what it's looking for. But if you just start typing in SCORE, you're going to see our composite rating, our stock composite rating. Okay, it has a base rating of 30, so if the rating is between 30 and 100. But I really wanted to show you today some cool stuff because ours is in real time, and I spoke about this last week. I told you how I was kind of watching a stock, and it broke a certain moving average, and all of a sudden I saw the score, drop about 5 or 6 points or something like that, and it's like, wow, this is cool. Nobody else has this, and this is so much more helpful, not only for the day trader, I mean for any active trader, but also for the investor. And I'm going to give you an example of how fast we are changing the score. So what I did is I pulled up a top list, a single top list right here. I didn't even name it. I just wanted to pull it up and drop Facebook in here and do stock composite. So let's pull Facebook up on the chart. Well, let's take a look at what the score was on this day right here when it was powering forward. This would be the July 25th. So the way we do that is just go right click, go to history, time frame, and use historical date. And let's just go back to July 25th. There it is. Bingo. Okay. And that's not correct. Hold on. Time frame, historical date. Because I had it on 4/31. Let's go. Let's put it on 2/31. There you go. It had on this day right here before the close, it had a composite rating, a score of 100. Okay. You had earnings, you had the big drop down, and trust me, all the competition out there on this day would have had the same score, right? Let's see what ours did on this date. If you go to 26th, same time is fine, and you got a 62. So that goes to show you guys, ours is in real time. And somebody say, well, what difference does that make? I mean, you guys are going to be, fluctuating all these scores. So was that really at score when it was scoring 100? Sure it was. It's a very strong chart technically and fundamentally. You have to have some really good fundamentals and technicals to get a 100. But if it breaks down, I don't care if the fundamentals haven't changed at all. That technically it broke down. So why would we continue to give this a same score? I think we're doing you more of a justice by giving you a true stock composite score. And if it breaks down technically, it's screw it. It's breaking down technically. Think about it. Think about if you were to go to another site and you saw this, trading in this range right here, and you're like, wow, this company XYZ is still giving this Facebook a 98. I'm going to load up on this, and look what's happened since then. The score has actually gotten worse. Okay, let's put it on today time frame, live during market hours. Boom, now it's at 54. So I trust me, guys, this score is going to help. If you're a trader, or even if you're an investor, this score is going to help you. We're going to prevent you, because when technicals break down, it's going to be reflected fast in our score. Okay. With that being said, let's pull over the stock composite rating. You're going to see stocks in here. Let me see if I can just find an example. Okay, Apple. I don't even think it may not even be in here anymore.
Hey, no, Andy, and by the way, your list looks very similar to the list that I'm looking at over here. But
okay.
Here's a bit of trivia for you. Let me count these up real quick. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, 13 stocks on my list that had minimum score of 99. So all these 13 stocks had 99 at the worst and 100 at the top, right?
Okay.
Every one of them finished higher than where it opened today, except one.
Wow.
Now that was a 99. All of my 1, 2, 3, 4, 5, 6 that were scoring 100 today, all finished higher than where they opened.
Mm-hmm.
Now,
wow. That's
will
impressive.
that be the same moving forward? I don't know, but today in a kind of iffy market,
mm-hmm.
that's a pretty good piece of data right there. That's very interesting.
Yeah, I'm glad you shared that with me. That is very interesting data. And Fernando, to answer your question, he said, can you use a composite as a condition to exit the trade? Boy, that's a good question, Michael. I'm sure Michael can come up with something.
If it's a filter, yes. Like in the back tester, the advanced tab, where you can, use the advanced tab and select that filter. And if that score drops below a certain level, yeah, that could act as an exit criteria.
That's a very, very good question, Fernando. And yes, he's right. I don't usually use filters, but I may start playing around with it more. But a very good question. But I also wanted to bring this up because sometimes, I noticed the other day, it's like Apple, had 3 days scoring 100 up here, and then all of a sudden it had 3 days of pullback, and it was at like 89. I'm going like, gosh, do we really want that? I mean, it's just having a pullback. And the more I thought about it, I said, well, sure we do. I mean, our scale is going to be different than what you see out there in competition, because they're going to stick a number on something. It's probably going to stay there. That number is going to stay there for a couple of weeks to a month, whereas ours is going to be more reactive. Okay, it's real time. It's technically sensitive to shorter time frames, and that is helpful, because when stocks start breaking down through major averages, and you need to be aware of it, and that's what our score is going to do for you. Okay, so if you see a stock trading at 100 composite score, and then it has several, let's say 3 or 4 days of pullback, you look down there, well, gosh, this thing's below 90 now. Do I want it? Nah, maybe. It's just letting you know that, hey, technically, it probably more than likely, it's kind of getting a little bit suspect on the shorter time frames. So that's what our score is going to let you know, and maybe we'll come up with some sort of something to help you know, without giving away too much information, that. Because trust me, I've seen some really good looking stuff, with an 80 to 85 score. So don't think because something has dropped to like 85 or something like that. It's not like all the 90s are A's, all the 80s are B's, it's not like a school grade. But it's going to be technically sensitive once again on the shorter time frames. Okay. And also it can change drastically overnight, okay, just like you saw in Facebook. And that, I think, is going to be favorable to you, because you need to know that stuff. I mean, why do we want to just stick a score on something you didn't even know it falls apart technically? We're like, oh, we still believe in it, you know? No, we do. We look at technicals first and then fundamentals as far as our rating goes. All right, so I hope that kind of cleared things up. And yeah, if you guys ever have any questions about it, just shoot us an email or ask us in our many forums that we have throughout the week, and we'll be happy to explain it. All right, I'm going to show you on my next topic here today, and I think you guys are going to like this. Got an email this morning, and let me pull it up. And this was the email along with a graph, and it asked, how do I find the exact setup below? Stocks gap down, then move higher by 1 or 2 candles, then reverse. Thanks. See, you see what we have to deal with all day? No, this is actually kind of fun. So what I did is I said, okay, we're not going to have this 2 candles. There's too many if wins. So I start thinking, all right, I gap down, that's easy. I can just use a gap filter. I can show the moving up by change from the open instead of change from the close. Obviously, we got to be careful. We can't use any sort of new high filter or something like this, because he wants the stock reversing. So I'm thinking, gosh, how can I show a reversal? I can't do consecutive candles. I could, but by the time it goes down to the bottom, it'll be too late. By the time a lot of cases, when you have a big move in the morning, by the time it takes out the low of that second candle. So I said, well, let me just start. And I tell you guys all the time, I said, just start thinking and build these things. So I started with an A window. The first thing I want to do is like, okay, it's got to be coming down. All right, because he wants the stock to have had a move up, but now it's coming down. And I said, well, I obviously can't use a new low. I can't use a 15-minute low. It may be too late. Why don't I use a 5-minute low? That's a shorter time frame. That's a good time for the stock to reverse by putting in a 5-minute low after maybe running up for 15, 20 minutes. Now, how can I make sure the stock is gapping down and then shooting up? So let's just take a look at the filters and look at what I did. And this is going to help you guys when you're not seeing the things you want to. All right, look at some of the other filters, because it's amazing how you can kind of improvise. And when I show you some of these charts, you're gonna know exactly what I'm talking about. All right, so there's my 5-minute low. Let's take a look at some of the filters. I think I have hide unused. All right. So relative volume, I just stuck a 1 in there. I didn't want to find something that's real anemic, not trading. So I just wanted things that are doing at least normal volume. The price, I think I actually was trying to back test this, and it didn't back test all that great, but there's still some very good setups in there. And one other point, that's the thing about back testing. If you have an alert and you're getting some really good signals in there, but it's kind of like the well, I'm not going to go there, but if you're getting some real good signals and you're saying, well, great, I'm going to back test this, and you back test it and it doesn't come out that great, that doesn't mean it's a bad alert window that you built, okay? Because remember, guys, you have control. As long as you're using the right risk parameters, those good setups can work for you, and you can, as long as you're managing the losers and using your best judgment when to take a trade and what not to, you can have a really good alert that's going to give you some really good signals, even though it may have a really bad 35 or 40% winning percentage, because it's all about finding the trades that work, managing your losses, and letting your winners run. So I just don't want you to get discouraged if you think you've built a good alert, but the back testing is not good, because it's very, very hard to get, to build an alert that just back tests, great. That's why we give that stuff to Holly. All right, so what I've done here, relative volume, the price I was trying to back test it. Average daily volume, I'm looking for something that just does 300,000 shares a day. This EPS, guys, right here, for those that don't know what this is, it is just a hack to basically eliminate all the ETFs It's basically telling the algo you don't want to see anything come through this alert unless it reports earnings. But here's the key ones, and it's very simple. I said, okay, he wanted something gapping down. I put a gap of max -1. So let's click on our show me button. The open was at least 1% below the previous close. All right, so we know we have a stock that's gapping down. What did I do right here? Change from the open percentage. Okay, I put the price was at least up 1% from the open. So now I know I got a stock that at least gapped down 1% and at least moved up 1% from the gap. It could be 2%, 3%, that's okay. I just wanted to do a minimum of 1%. So I want a stock that's gapping down, but yet in driving on the early going. So very simple, okay? I didn't have anything to do for 2 consecutive candles moving higher like you wanted. That's okay. This is how I improvised to create that same, pretty much that same setup, and then I just use a 5-minute low. So let's take a look at some of the stuff that was flying through here. And I think it's gonna be very similar. But once again, let me pull over what he showed me this morning. This is kind of what he was looking for. Gapping down, big move up, and then a reversal. He has it circled. All right, so let's take a look at some of these ones that came through. Now, these are going to be more effective in the morning because you're focusing on the gap and all that. Okay, there's your gap down. There's a 5-minute chart. There's your gap down. There's your move higher, and then there's your alert. I think that one. Let's go a little bit further higher up. That's a good one right there. Okay, there's your gap down at least 1%. Took off, and then there's your reversal on that candle right there with some nice follow through. Take a look at I. There you go. This is one that really, really moved. There's your gap down, ran pretty hard, but look here, there's your alert right there, and the subsequent, fall from grace. PBTL, and don't worry, I'll share this for anybody who wants it. Here's one right here, another gap down, moved up at least 1%, from the open this morning, and you got a signal there, kind of went sideways for a while, then finally rolled over. Let's see, I already looked at Funko. Let's see, GD, and there's another one that you got your signal, and you got a little head fake up. Finally did what it was supposed to, but that is a little bit of a nasty movement right there. I think we already looked at that one. You'll obviously get a lot of repeats in these because every time they hit a 5-minute low, as long as they're fulfilling their parameters and they're hitting a 5-minute low, you're going to continue to get these signals. Oh, David, David asks a good question. What is the philosophical reason for excluding ETFs? There's not one. A lot of people just like to trade individual stocks, but I agree with you. I do have windows that ETFs are allowed. It's just a matter of preference, David. One reason I did in this one, but go ahead, Jamie.
No, I was just gonna say, because most ETFs are tied to that overall basket of whatever it is that they're tracking, right?
Mm-hmm.
So, it's a good question, but once again, on the other side of the coin, if the chart pattern fits, the chart pattern fits, right?
Exactly.
So it's just kind of a personal preference, more or less.
Mm-hmm. Where it gets me a lot of times, David, is I'll get those a lot of double and triple ETFs that are leveraged. Okay, so your gap downs are going to be bigger. So even though like gold, maybe the commodity is not really gapping down 1%, but the triple ETF is. So I don't like when I start getting those in there. But all right. So anyway, let's see where we were. Yeah, you can see I'm getting a lot of repeats coming through here. KR, now see here's one that came later in the day, finally bled off some, but not a whole lot of movement there, but still the same. But I'm not going to go. You're going to get a lot of repeats because the parameters are calling for something that's gapped down and then ran higher for, and a lot of the good ones are going to come at the open. But anyway, I did play around with trying to back test this. Let me see my final, what my final thing was. I couldn't get it to back test, very well, but actually the profit factor wasn't all that bad, 1.43, but the winning percentage and what you're going to have, maybe if we do get into a bear market, something like this will work really good. It's really tough right now in this bull market we're in, because a lot of those ones that gap down, they just keep going. But maybe this is something you keep in your arsenal, and you pull it out when we start to break down. This is something that could work. The profit factor is not bad, 30, so you got definitely over 2-to-1 average winner and loser. But
yeah, the spread between winner and loser is not that bad. And by the way, Andy, Fernando asked another question here.
Okay.
So the composite rating, his question is, should it take into account the time for the next earnings release? And I don't think so, not before, right?
No. See, the problem with fundamentals is they're backward-looking metrics. Okay, well, I guess everything's backward-looking metrics, but fundamentals are more difficult, and that's why they don't get as much weight as technicals, and they never will in my book, because they're not forward. They're just I don't trust them as much. I mean, I can see a chart, and I can dissect it better and get a good idea of where a chart may be heading. I can't do that as well with fundamentals. I'm trusting in too much in CEOs and CTOs, and I don't want to do that. It's just but there's some things that are important, and the important things are in there. Cash and debt, growth. I like growth is important. I like to see growth. Earnings is in there. We do have earnings stuff in there. Okay, but not
after the fact, though, correct?
It is.
Mm-hmm.
It is. I mean, because you can, I can find you stocks, like let's take a look at L Brands, for example. You got earnings $3.18 a share, but look at this chart. That doesn't mean the company's doing well, and so I can't give a lot of weighting to earnings, but at the same time, it needs to be in there. Because there are some companies out there that are making a lot of it, but to answer your question, no, it's not just something that's going to fluctuate as we go into the earnings date. No. All right, let me see if we got any more questions. Okay, got it. So I can place a filter. Yeah, you can use the earnings date that we do supply that for you, and you can definitely use that as a filter to prevent you from making any trades going into earnings, for sure, Fernando. All right, so yeah, that pretty much wraps it up. I'm going to go ahead, and for some of you guys who want to take a look at this, and once again, what I really wanted to show you, it wasn't to show you a killer alert, although I can definitely see the benefits of this alert, but I wanted to show you how you can think outside the box, and if you're looking for a certain setup, don't think you have to have all these bars doing something and then reverse. Use what we got, because we got tons of those gap, position in range, change from close. It's just amazing how creative you can get with our filters. And as you're building your alerts, it takes time, but it's worth it. So I am going to save this for you. Actually, I'm just going to grab it out of here. Let's see, share, copy all, and then I'll just drop it into the chat there. I'm just going to call it gap down. And what I'm doing for you guys who are in here kicking the tires, with our what we call cloud links, we could share any of our alerts with anybody else. So they have the ability now to grab this from the chat and basically have access to this alert immediately. You're welcome, Waleed. You're very welcome. But that is all I got, folks. If anybody wanted me to take a look at me and Jamie and take a look at a couple of charts, I'd be happy to. If not, I can always bring Scott in here to walk us out. You guys hang on, because Scott's gonna offer you a discount code at the end of this. Can we have the composite rating, please? Sure, absolutely, you can. Make sure this is, yeah, stock composite. Let me just go ahead and save and share this. And I'll just call it CR. And there you go. You're welcome. You're welcome, Ami. Fernando, I asked more on how, I'm sorry, do we become more creative? Asking more about how we come to, well, I gave you a good example. I think the best way, Fernando, the best way is just, get the, like I said, get the idea in your head, get into the configure. This is where all the magic takes place, okay? All right, obviously in your head, look at a chart. Look at a chart and you're saying, wow, this is interesting. And I want to find something that catches that. And then what you can do is just start building, building an alert. Maybe you start out something simple like a new high and then use your filters. Use the search function a lot. Position and range. These things are so powerful. Just type in POSIN and start looking through some of these. And I'm telling you, just if you have a chart that you like, you can pretty much build it just using our position and range filters. So let's say you're looking for something, trading at, near a year high. We got position in year range. You can click that, add filter, and if you're trying to find something, near the type, just put 95 in there. That's now you're only going to find things that are near a, yearly high. So check out all our filters. Go back and just look at them all. And I know there's a lot in there, so a lot of times if you think it's just start typing in there and see what's in there. You'll notice the keywords like distance, change, position in, and just it just takes time. You're welcome. All right, guys, I don't see any chart requests for today. I'm going to bring Scott in here. We're getting kind of at the end of our webinar anyway. He'll walk us out, and you guys hang on because he'll have a, get on the right slide here. All right, Scott.
Hey, thank you, Andy.
Oh, you're welcome.
Yeah, a couple items on the way out. First of all, I think we've already mentioned that we got a great ebook that Andy and Jamie both participated in authoring. They both contributed some chapters. It's got 5 chapters. Each chapter is a strategy, 5 ways to win in a post-PTFD market that we've been in since February. So go to trade-ideas.com/ebook. If you don't have the book yet, put in your email address and you'll get a download link to your email. It's quick and easy. We've got a podcast. There'll be a new episode out tomorrow, so make sure you're subscribed and ready to get it. Trade Ideas Podcast, search for that in your favorite app that you use to listen to podcasts in. Click on subscribe. And then check out some of the archives, too, while you're waiting for a new episode. And at some point tomorrow after the close, you'll get a fresh one. There's an event coming up next month. We've still got tickets left. There's half of them are already sold. And also early bird ticket pricing ends on Saturday. So right now tickets are $118 each to attend in person if you can make it to San Diego. After Saturday they go up to $236 per. So over half are already gone. If you want to get in on the early bird stuff and you can go ahead and make it to San Diego, it's time to stop thinking about it and just pick up the tickets. And there's also once you get a ticket, you'll also get a follow-up email with a discount code to use at Kimpton Palomar, which is the hotel that most of our VIPs are staying at around the corner from where the event is. So keep in mind you'll be able to get a good rate. So once you get a ticket, call up the Palomar Kimpton and use the code that you get after you purchase a ticket. TradeIdeasEvent.com is a place to go for details. And we also have a discount code for subscribing. Alpha Studio, all caps, will save you 15% off the first month or year of Trade Ideas, and those of you that are on standard will be able to use that to upgrade to premium. So keep that in mind, jot that down, and thank you all for attending. Any questions, send us an email to info@trade-ideas.com. That goes into our help desk software. You can follow Steve Gomez at Today Trader. Jamie Hodge is at QuantBot. We also have at Trade Ideas, and Go to facebook.com/TradeIdeasPro and like our page to get our updates on Facebook. We sometimes put some special notifications up there. Thanks, everyone. Thank you, Andy and Jamie. We'll have the recording up later on tonight or tomorrow.
Yes, thanks everybody. Arlie, I see your question just come flying in there. Come to our support webinar tomorrow, and we will answer that. And thanks everyone for your fine comments. Appreciate it. Bye-bye.
Yep.
Thanks all.
See you tomorrow. Bye-bye.
Later.